What's up guys, welcome back to the channel. In today's video, I'm going to talk about the Quasimodo pattern. A Quasimodo pattern can equally be called the QML pattern. The QML pattern is essentially a reversal pattern that can indicate a change in market direction. This QML pattern has two types and I will explain the two types in today's video. I chose to explain about the Quasimodo pattern because I made a post on my WhatsApp platform and I asked some of my followers to choose a topic I will explain in today's video. 80% of them asked me to talk about something I've already explained and talked about in this channel. But good number of people asked me to explain about the Quasimodo pattern. And that is why I'll be explaining this pattern in today's video. So let's jump straight into what we have right here. I'll use this sketch right here to explain this Quasimodo pattern and how you can make money from the financial markets by understanding this particular pattern. This pattern is very similar to my trading pattern. The way I trade with liquidity sweep pattern and a change in market direction pattern is very similar, but it is not exactly the same. This is a pattern on this price chart, and what can we actually see from here? Over here we see price forms a high, and after price forms this high, we have a pullback, price forming a low, which indicates that we are in an uptrend. After the low was formed, price pushed to the upside, breaking structure, which indicates that we are in continuation of this uptrend. After the break of structure, another high was formed, a pullback, a low, and now we see price forming another high, giving us a break of structure. Now this is a basic smart money pattern which everyone knows, where price forms a pullback and a continuation to the upside, giving a break of structure. So everyone understands this. When you see this and now you see price breaking lower to take your higher low, this signifies a change of direction, and we go ahead now to label it our change of direction. This indication of change of direction can equally be called a market structure shift, or you call it a change of character. What this shows is that we are likely going to shift from a bullish market to a bearish market. I hope you understand this part because this is a basic smart money concept. Now talking about the Quasimodo pattern, once you have this shift in market structure, what you're going to look for is your QML level. And where is your QML level? You see this high right here? You're going to draw a line from this high and extend into the future. This is my QML level and I will go ahead and label it QML. Now, what you need to note is that anything from this high to this up right here is your QML level. And our expectation is that price will come back to this QML level, then we look to trade to the downside. There are other confluence to this. Why do we have confidence to trade from this QML level? Why we are trading from this level is that this level always aligns with an order block. Normally, we should come over to this area to select an order block to trade from that area. But this level always aligns with an order block or a supply zone in this case. So having an order block at this kind of area, it's a confluence that is going to give us the confidence to trade from this particular QML level. Another important thing you should note and take into consideration is that there must be a build of liquidity before this QML level, just like the case we have right here. You can see price forming equal highs over here, and equal highs is another sign of liquidity. So when you see these equal highs, it's going to increase the probability of this setup playing out. So this is what we want to see. Firstly, we want to see a change of direction. So when you see a change of market direction, what you should do is, secondly, you have to mark out this your QML level. When you mark out your QML level, the next thing you should note and consider when price is returning to your zone is if price builds liquidity. Liquidity can be of any type. Price can equally form a single high, a pullback before it comes to mitigate this zone. So when price builds this liquidity, the confluence is enough because we know we have an order block at this area, which will be another confluence to increase the probability of this setup playing out. Now when price comes back, we're going to wait for price to mitigate this level. In some case, we do see price come mitigate this level and a push to the downside immediately. And in some other case, we might see price coming deeper to mitigate the order block. This is how these setups look like. So while trading this setup, what you should do is you should place your stop loss above this high right here. Your stop loss should be placed above this high. Your entry should be at this area. And if you don't want to take the normal risk entry, which everyone knows, you can actually wait for your entry confirmation. And this is exactly the QML pattern. Depending on how you enter your trade, this low right here could be your possible target, or you can place your targets based on your risk to reward ratio. Waiting for entry confirmation will be the best approach. So this is exactly the QML trading setup. Let me show you the second type. Remember, I said the QML pattern is of two types. Now, here is the second pattern right here. And this pattern is very similar to the first one. So in this case, what can we actually see? Price forms a high, a pullback, and it forms a low before we see this break of structure. And this is exactly what you want to see. When you see this, you should be confident that we are still in an uptrend. Now, in this case, what do we see price do? When price forms this high, we see a pullback and a continuation to the upside, which gives another break of structure. So now we have this break of structure. It's okay to draw this line, this QML line. Now, if price pulls back and continue to the upside, you can disregard this line. But in this case, what do we see price do? Price come back, retest this line. Now price retest this line. People who want to trade support and resistance, they will see here as a support level. That is price breaking through the resistance level, retesting, and they see here as a support level. Now they'll be looking to go long from this area. But in this case, what do we see price do? Price manipulates, give a little reaction, and now we see a push to the downside, which gives us a change of character or a market structure shift. Now, this little reaction we have right here, this is what we call the MPL. That is maximum pin level. This is just the setup right here. Let me mark this out and label them so you understand better. So this high right here is your QML level. This little reaction before the push to the downside, this is your MPL. That is your maximum pin level. And right here we have the market structure shift, which we can call a change of character. Price changing from pushing to the upside to giving us a shift to the downside. So this is all you need. Now, what you can actually do is you can come over here to mark out this level, because this level is more like a flip zone. So you could look to trade from this particular level. Remember, you still have your QML level. Once you have this push, a little reaction and a shift to the downside, there is also a possibility that price is going to leave an order block at this area. So this is the second pattern. And in this case, why do we choose to trade this? We have an inducement area which increases the probability of this playing out. If you have an inducement area before price comes back to this area, it's very valid. And once price comes back, you can go down to your lower time frame, look for your entry confirmation and trade to the downside. Or you can actually use the risk entry, which is popularly known. So talking about the liquidity types, once price presents any form of liquidity before your trading zone, it's very valid. If you see this type of liquidity setup, it's valid. And if you see this type of inducement, it's also valid. So any form of liquidity that price builds before this zone, it's very valid, and you can look to consider that. So this is what the QML pattern looks like. And if you want to go long, this is just the flip of this, okay? This is just the flip of this, and I hope you understand that. I won't like to waste time explaining that because this is just the flip of this. I've used 2 or 3 examples on the price charts to help you understand this better in case you are still confused. So we'll be going to the price chart right now. Let me show you some of the examples and help you understand better. Remember, this is the QML pattern, and this is a very simple pattern. But if you watch closely, you will notice that this pattern is very close to the pattern I trade on the price chart, because this is more like the ABC pattern if you understand the ABC pattern. And this is equally very similar to my high probability order block when I trade. Because when I trade my high probability order block, what I do is I look for a liquidity sweep. And from what you can see here, this is a liquidity sweep, price taking this old high. When price takes this old high, we have a shift in market structure, which is what I usually look for. But the only difference here is that I don't trade from this QML line. And another thing is that in some cases, you see me looking for my order block at this extreme level. So this is how I trade. And this is a very profitable pattern. Let's go to the price chart. Let me show you examples. If you're new to this channel, consider subscribing to this channel if you want to watch more content like this. So this is the first example I will use to explain the Quasimodo pattern. Like I said, the Quasimodo pattern is essentially a reversal pattern that can indicate a change in market direction. And the very good thing about this pattern is that if you can actually enter at the very point where price is trying to reverse, you'll be able to catch a good number of pips because that is a reversal point. So I hope you understand what I explained at the first part. So let me explain more right now. So this is CAD CHF, the 4 hours time frame, and what you can see, price has been in the downtrend pushing to the downside. From the pattern I explained, what you want to see is price being able to take an old high or an old low before we see a shift in market structure. From what you can actually see over here, this is a high, and you see this low right here formed this high. After the high was formed, you see price push to the downside, and we have this sweep of this low. That is price taking this particular low Now after price takes the low, what do we see? We see price reversing to the upside and we have a shift in market structure. So I'm going to label all this so you understand what I'm trying to say. At first, you see price sweeps this low. I hope you can clearly see it. Price sweeps the low and here we have a shift in market structure. So you can label here as your market structure shift or a change of character, any one of your choice. So here is your change of character. How do we actually mark out this QML level? A lot of people, when they want to mark out their QML level, they usually mark it from the lowest point before price comes back to take it. You see them coming to mark their QML level like this. And if you try to mark it like this, it's still a very good one and it's still valid, okay? If you try to mark it like this, it's still valid and it's a good one. But me, the way I do mark my own, I will advise you to mark it from the wick of this candle. Marking it from the wick of this candle is going to help you minimize the size of your zone, okay? Because if you try to mark it from this low, you can see that you're going to have a very large zone. So when you try to enter this using the risk entry, you're going to be trading from a very large zone. But refining it down to the wick of this particular candle right here, I hope you can see this candle right here. Refining it down to the candle is going to compress your zone and you're going to be trading from a lesser zone. The disadvantage of refining this QML level, trying not to mark it from the close of this candle right here, is that at some point price might not actually get to this level, okay? This particular level you chose, at some point price might fail to get to this particular level, which might make you miss some trades. You might miss out on some of these trades, okay? So that's just the disadvantage of marking from the wick of this candle. Right now we have our zone marked out and you can go ahead and label here your QML level. What you do is you extend the line to the future. And what else do I said is the confluence that's going to help increase the probability of this playing out. We're going to mark out our liquidity area, and from what you can see, price builds liquidity at this particular area, and this is the setup. Very simple. QML level, a shift in market structure, and a build of liquidity. And if you look, we have a zone. If you go down to the lower time frame, you see we have a good order block right here, which is another confluence that will help us trade this and make the most out of it. And now if you want to take your target, here could be your profit target. This high right here could be a very good place to target. And you see your setup is okay like this. So what you're going to do is you either wait for price to come back to this QML level and you enter your trade using the risk entry, or you actually wait for a confirmation. And if you want to place your stop loss, this low right here is a very good place to place your stop loss. So this is all you need, and this is your setup right here. If you want to make it to look good, you can actually use this box to mark it out instead of using a lot of lines that might actually confuse you. So this is the simple setup and this is what it looks like. So let's play price forward and see what we have. And you see price moves to take this particular high, which we see as our take profit. Now that price takes this high, a lot of smart money traders will look to trade from this particular area right here because we have a good order block right here, right? So this is one of the smart money traps, and this low can be called an inducement area because sometimes I do fall for this kind of trap too. You know, you can't always avoid this. So some smart money traders will still look to trade from this area. But if you were able to identify this setup already before you see this break of this high, you might actually be patient enough to wait for price to come back to this particular low right here. So this is a smart money trap, this area. So you've seen we have this liquidity area right here, this inducement area where price will manipulate even smart money traders, and we equally have another trap right here before this zone right here. So this increases the overall probability of this trading setup playing out. So you can actually look to take your profit targets to this particular high right here if price will actually get to that high, or you could look to target some other place, or you do it based on your risk to reward ratio. Okay, so let's play price forward and see how this plays out. And now you see what happens here. Price comes back to this order block. You see this little reaction. Price gave a little reaction and it sweeps that particular low. Now price is heading to this other liquidity area, and let's see how price reacts. And you see how it goes. Price comes to this particular area again. You see a little reaction once more. Price starts into this zone and you see that sweep reaction. You see very quick reaction, and this is a kind of a sniper entry because price mitigates the zone, and you see how it reacts quickly and it's pushed to the upside. So this is a very good setup, and let's see if price was able to get to our profit target. And you see price takes that high. very simple and very easy to trade. Okay, this is a very simple setup, the QML setup. I don't focus on trading QML, that is just the truth. I don't focus on trading it. I have the particular way I trade it, and it's very similar to this particular one. It's about 70 to 75% similar to this, because what I do is I have a sweep of liquidity, I mark it out, and I look for my zone. In most cases, I still mark out my liquidity areas, so it's very similar to this setup. Okay, so let me show you a second one, and if I still have time, I will show you one more example making it 3, but if I don't, I will end the video after the second one. No need to make the video too long, because I know this is a simple strategy and I know you understand it better. I have about 8 examples here, because this setup is something that happens week in and week out. Okay, we see it every day on the price chart. So let me show you the second example right now. So here is the second example, and this is incurred, the 4 hours time frame too. Now, one thing I want to touch before I continue is that this particular setup works on all time frames. Okay, you can actually spot it on different time frames. It doesn't necessarily mean it must be the 4 hours time frame. You can see it on different time frames. Okay, so this is it right here, and from here what you can actually see is that we have a pullback and a push to the downside that took this low. So this is a change of character. Okay, this is a valid change of character, and it's very clear right here. Now, where is your QML level? Your QML level is this particular level right here. If you mark this high and you extend, this is your QML level. Okay, so this is the particular zone you'll be looking to trade from, this area right here. And now you can see price has built a lot of liquidity at this particular area if you try to mark them out. So this area as it is are liquidity and inducement area, and our setup is confirmed. So you'll be trading from this particular area right here, and your stop loss will be placed above this high. So let me take the QML to a different area to enable us mark our zone correctly. So this is our zone right here. If you want to trade this setup, this is the zone which you'll be looking to trade from, and you have a liquidity area right here. So this is a very clean setup. Now, if you look closely right here, what else can you actually see over here? What you can see is that we have this low, and this low took this particular area right here. So let me show you what I'm seeing at this particular area. You can see price takes this low, which is a sweep of liquidity, and price gives us a change of character right here. That's a very clean one. I hope you can actually see it. And if you try to extend this, you see this is another QML pattern, which I told you that in some cases we do have an MPL, that is a maximum pin level, where we see price takes the low and we see a little retest, price reacts a little more before we see a break of that high that gives us this change of character. Now you can actually mark out this area as another area to trade from. I told you this MPL level looks more like a flip zone. So if you're looking to trade from this particular high right here, what you should note is that this could be your take profit, because price might react to this particular area. It's a very good setup also because we have a QML level right here. I hope you can see that, and price builds liquidity. You can see that, right? So let's press price forward and see. And now you see price came very close to the zone. I don't think there is a tap into that zone yet. And what can you actually see? Price pulls back a little more, building more liquidity for this particular zone right here. And now you see price mitigates this zone right here. I hope you can actually see that. We push to the downside. Now price coming back to mitigate this other zone right here. This is a simple setup, and it's very easy to understand. This is the QML setup, the QML pattern, and it's a very good strategy. And you see price is reacting from this particular zone right here, and I think this is where price is currently at. So this is a very simple pattern, and I hope you understand exactly how to trade this pattern. What you should do right now is you have to go back to your price chart and backtest and see and understand exactly that this pattern works. Okay, so that's it, and I hope you understand exactly what I just explained. If you're new to the channel, consider subscribing to the channel, and see you in the next video.